Maximizing your year-end tax savings is more than just figuring out deductions. It's about making strategic moves that can have a real impact on your financial future, especially for retirees. If you're like most people, you've probably left tax saving opportunities on the table throughout the year. But the good news is, you still have time to make a difference. In the next few minutes, I'm going to show you exactly how to get ahead of the tax game before the year ends, so you can protect more of your hard-earned money and boost your retirement savings. Now, before we dive in, if you're serious about protecting your wealth in the next 2 weeks, I encourage you to check the first link in the description for a free guide on why thousands of Americans are opening gold IRAs to protect their savings from the volatility of the markets and rising inflation. You'll want to take advantage of this if you have $100K or more in your IRA or 401K or even $5 in savings. Let's start with the basics, contributing to retirement accounts. For those of you with a traditional IRA or 401K, making contributions before the year ends can lower your taxable income significantly. The maximum contribution for an IRA is $6,500 if you're under 50, or $7,500 if you're 50 or older. For 401Ks, you can contribute up to $2,500 or $30,000 if you're over 50. If you're not maxing out these contributions, you're leaving tax-saving opportunities on the table. But here's the thing. If you have a significant balance in your IRA or 401K already, you're probably wondering what the next best move is, and that's where a gold IRA comes into play. A gold IRA not only allows you to diversify your savings, but it also helps shield your wealth from market volatility, especially in turbulent times like these. So, if you're looking to protect your hard-earned savings from inflation and economic instability, gold IRAs are one of the most reliable tools in your toolbox. Now, let's talk about tax loss harvesting. This is something that's often overlooked, but if you've experienced losses in your taxable investment accounts, you can sell those losing positions to offset your gains and reduce your taxable income. It's a great way to minimize the tax hit, and can be especially beneficial if you're in a higher tax bracket. You can also carry those losses over to future years, which could help you in the long run. Another effective strategy is taking advantage of tax deductions for charitable donations. If you're feeling generous, consider donating appreciated assets like stocks or mutual funds. When you donate them directly to a charity, you avoid paying capital gains taxes, and you can deduct the full value of the donation from your taxable income. Just remember, the closer you get to year end, the more important it becomes to act quickly on this one. Also, if you're 71 and 2 or older, don't forget about your required minimum distribution, or RMD. You must take these withdrawals from your traditional IRA or 401k, but you can actually avoid paying taxes on them if you directly donate that amount to a qualified charity, known as a Qualified Charitable Distribution, QCD. This can be an excellent way to reduce your taxable income without touching your personal savings. If you're also looking to hedge against the impact of inflation or market dips, there's another reason why a gold IRA should be on your radar. Gold has historically been a safe haven during times of economic uncertainty. That means by rolling over some of your IRA or 401k into a gold IRA before the year ends, you're setting yourself up for long-term security. And finally, if you've been thinking about your estate plan, this is the perfect time to make sure your beneficiaries are updated. With the end of the year looming, it's a great time to review your will or trust, ensuring your assets, including your retirement accounts, are going where you want them to. Tax planning around estates can be complex, but it's something you don't want to put off until the last minute. As we wrap up, I want to remind you that year-end tax strategies are an opportunity to save money, reduce your taxable income, and protect your wealth for the future. And if you're ready to take your financial strategy to the next level, especially if you're an American retiree with over 100K or even $5 in savings, don't wait. Click the link in the description to get your free gold IRA guide today. With just a couple of weeks left in the year, now is the perfect time to act. Take control of your finances and make sure you're on the right path for a prosperous retirement.